Welcome back. Let's get into this market picture now and how things have fared. Certainly, it was a bit of a mixed picture to start things off initially in Asian trade, but it seems that risk trading might actually be on. But is that really the case? We'll unpack in just a moment or two. In Hong Kong, the Hang Seng went up 2/4%, should I say, then as well, with the Shanghai Composite around 0.2%, better off the Nikkei as well in Japan, sitting up 0.5%. So a much better picture as well, filtering through from the Dow Jones Industrial in the United States then. So that's why you're seeing that positivity as well come through into the market picture, with Europe also sitting much better off, more than 1% gains for all of the major European counters, the FTSE 100 in London, the DAX in Germany, and the CAC 40 as well out in France. So locally, we're sharing a similar picture as well, 2.2% higher for now for the JSE All Share at 55,423 points at present. A good day as well for the banking counters, while it's an absolutely great day for resources, more than 3% higher at this point, 3.1% in fact, 3.6% higher for the gold indices, with industrials also following the same sentiment here, 2.5% better off as the day seemingly does look better off. Onto the commodity front, then also gains all across here, with the Brent crude price going up almost 2% at some stage even today. It's now at $43.84 a barrel, so a much better and a greener start there. The price going up, of course, as supply continues to be cut out of the OPEC plus nations as well. Platinum price going up almost 1% at around $830 a fine ounce there, with platinum with gold rather, should I say, $1,756 a fine ounce, only edging up, but still in much better territory on that front. Onto the currency, slightly better tinge to the local index there, 17 Rand and 26 cents against the US dollar, 1/3% better off this afternoon. Slightly flat picture there for the euro, and 21 Rand 49 then for the British pound. Perhaps some of that betterment coming through because of that jobs number not looking as worse for wear as perhaps some would have thought, but of course with the coronavirus impacting the numbers, certainly could have gotten even worse. Let's unpack this market picture then just a little bit. Sean Morrison joins us and he's from IG. Sean, it's a good afternoon to you. Thank you so much for the time. Look, the market is certainly going up one day and down the next, but it seems to be up primarily now. Have we turned the corner somewhat? Are we now trying to get back into somewhat of a bull market?
Well, when you look at the market, we are trying to price in the future, essentially, and certainly the central banks are throwing everything but the kitchen sink at the markets at the moment, so there's a lot of momentum helping them go higher. This morning's catalyst, Trump and his senior trade advisor, they've just confirmed that there still is a trade deal in place with China, so helping ease a bit of the tensions there. I think that's helping with the commodity prices at the moment, particularly base metals. The dollar's a little bit softer. That's helping some of the precious metals and things as well. So at the moment, markets are rallying. They are certainly being accommodated by central banks around the world.
Look, I mean, our very own central bank has certainly done a whole lot of work. So would you call this a risk-on market then? Is it perhaps sustainable for at least this week? I can't look beyond this week, of course, because things happen at any point in time now.
Yeah, I think everybody's view of a long term is a lot shorter now. Look, the momentum is with us. I will say that when you look at global markets, the rally it's caught a lot of people on the wrong foot. So there is a lot of short interest. What that means is quite often you can see the market squeeze, so actually push a little bit higher. But I will argue that some of the valuations are starting to look a little bit stretched. I think maybe we're pricing a little bit. We're getting a little bit ahead of ourselves at this point in time. Not to say that that we have to come straight back down again, but maybe just a pause in the rally, at least in the near term.
Yeah. Well, you never know. It certainly could come about. But one thing that hasn't unfortunately paused is the job losses that we continue to see. On the first front, the economy now sitting at 30.1% when it comes to that unemployment data. The statistician general is saying that COVID-19 didn't have much of an impact on this number, which means that it's going to get much, much worse than Sean.
Yeah, unfortunately, we only went into lockdown on, I think it was the 27th of March, and this employment data dates until the end of March. So we've got 4 days of lockdown, the impact of lockdown. And there are some estimates that predict that we could actually see another 1.8 million jobs lost, since the lockdown of COVID. So that would push that unemployment rate, could push it up to as much as 40%. That is a guesstimate, a Matchbox sort of calculation, but it's certainly not good. When you compare, to the US, a growing economy, a developed economy, pre-lockdown, they were sitting at about 3.6 unemployment. And then that pushed all the way through to 14%. So the pain is yet to be. I think we're feeling the pain anyway. I think the general society is feeling the pain, but just to be acknowledged in terms of the stats, that's still going to come. And it's way worse.
If we extrapolate what happened in the US and say let's lose 10% with regards to our unemployment rate, that actually takes it, as you said, then to around 40% when it comes to unemployment. It's massive, and globally it will certainly be the worst in the world then. So a very dire picture on that front. EdCon as well then, the business rescue practitioners there, finally an agreement, 75% that is, having voted on an agreement from the creditors, having voted on that business rescue plan. Does it bode well for the company? I mean, if this goes through, it means that we're selling off parts of the business now.
Look, EdCon has struggled since our previous recession, since the global recession, started in 2008. They were privatized, they were bought, they were delisted. They were bought at a premium just before the NCA. Then we hit recession, and unfortunately, they just never really recovered from that. What you found over that period, the business started focusing on operational efficiencies, generally with retailers, and that they need to grow their floor space. That has been how they've grown in the past. So, EdCon, as we know, has been labouring for a long point of time. So now it looks like, it's going to be selling off those assets. Edgar's in particular, but obviously being the premium assets. And we should see some type of, we should have there's apparently 15 interested parties in these assets. We should see some of those names and that revealed soon. Just on that, we talk about the unemployment and the effects of unemployment. It's another, 22,000 jobs, 22,000 retrenchments are coming from EdCon. And if, we're just putting into context that jobs data that we were talking about a few minutes ago, that's a lot of jobs. That's a lot of people that are still set to lose employment rather than just, what's already been lost. Retailers, they are major employers.
Yeah, they certainly are, and so too is government. So the question becomes then, what happens tomorrow? Very quickly, your biggest expectation out of the budget, the supplementary budget from Tito Mboweni tomorrow?
I'm just glad I'm not the one doing that budget. It's such a it's a knife's edge balancing act. We've got to rein in expenditure. We needed to try support growth within the country. We can't keep funding everything through debt. Debt to GDP is expected to about 80%. We've got a budget shortfall. We need our economy to get going. So I welcome any plans he has to help kickstart infrastructure and rein in spending.
It's not just a balancing act anymore. It seems more like a juggling act, and it gets a whole lot more tricky. We may be in a totally different kind of circus right now. Sean Morrison, appreciate the time. Thank you so much for joining us from IG South Africa there, having joined us to unpack this market picture. Let's head on over to a very short break. Then we'll be